Let's welcome Dipan Mehta, Director at Elixir Equities, joining in now. Dipan, your thoughts, one, on Axis Bank results, mainly because, on the one hand, the operational performance was decent, but the PAT, once again, impacted by a one-off.
Yeah, good morning, Mangalangam. Thank you for having me on your show. Slight disagree with you that even the operational performance was extremely disappointing.
Okay.
Its loan growth is, we were used to 15-17%, has now dropped to 10-11%, I think, which is below a lot of peer group companies, below a lot of PSU companies for that matter. There was a shrink in the NIM. I think anywhere from about 73% increase in provisions. So I'm not so sure. I think, when I look at Axis Bank results just now, it reminds me of the PSU bank results we used to look at 3-4 years ago, So very, very disappointed. And I think that these companies, HDFC Bank, ICICI, Axis Bank, IndusInd Bank, we need to have a strong look at these companies. What is going to be the long-term trajectory? Are they going to really be outperformers as they have been for the last 30 years? I don't know. I don't have answers to these questions, but I'm looking at those holdings very, very closely in terms of exiting them.
Okay. All right. Not too impressed with Axis. Got it. Dipan, what about Urban Company? On listing day itself, it went up dramatically. There was some follow-through buying, and it's back at around 165 rupees on. Today, there's a lock-in that opens up, so that could be could possibly be fresh supply that comes in there. What's your view on the company? We know there's a long runway. Most of us are users as well. But from an investor perspective, what's your take?
Yeah. Good morning, Nigel. See, the way I'm looking at Urban Company, and mind you, as a measure of disclosure, we have invested in that company, is to see the roadmap which has been, kind of traversed by Swiggy and by Zomato, especially Zomato and then even Paytm. Although these are different companies in different sectors, but basically these are, kind of different types of businesses, platform businesses, companies which built huge user base, subscriber base, and then now they are trying to, get into a profitable zone. And that may take some time. But end of the day, I think what happens post-listing is that these companies which were earlier PE funded now look in terms of making adequate profit to service the new investors. I think Urban Company will go in the same way and follow the same path. And therefore, if you have a really long-term horizon, 3 years, 5 years, 10 years or so, then I'm sure Urban Company can deliver very good results, very good returns, as we have seen the case of Eternal and even Paytm. But you should be prepared for a lot of volatility in the stock price and the earnings.
Typically, this current quarter is a very strong one for Urban Company, given the Diwali festive cleaning that takes place, the deep cleaning services. So typically, Q3 is a good quarter. So we'll await numbers as and when they come. 164 is the share price in Urban Company. The high was, I think, 201 on that.
Dipan, imagine, 173 crores on this single trade. IEX in an entire quarter, the organization makes 110 crores. So the single trade was actually 1.5 times what IEX's PAT was in the last quarter. That aside, let's talk about the life insurance companies. HDFC Life, we'll be talking to the management later on. Any view on that particular name?
No, Nigel, I have given up on the insurance companies. Completely candid, extremely difficult to understand the business. And look, if they had set the stock market on fire and these companies had been great value creators, outperformed the Sensex Nifty by a huge margin, me and many investors that have taken the trouble to understand them and all the kind of exotic acronyms which they keep using in their financial disclosures. But look, end of the day, 5-year returns for HDFC Life have been subpar, below the Nifty returns. Same is the case with ICICI Life and also SBI Life. I think the only outlier has been Max Life. But as I said, I think, there's so much of choice in the financialization of saving space that you're better off working on those ideas than insurance companies. I think they have challenges in terms of high regulatory requirements which prevent innovation. And so many assumptions also are taken. So, I mean, from an investor's perspective, they are great stocks in a turbulent market. They are safe stocks. But look, we want growth stories just now.
Okay. What about KEI? It provided that growth. You have two big players that are going to be coming in, but it seems the sector itself has a lot of growth tailwinds. Your view on the results or the read-through for the other companies?
Well, I think very good set of numbers from KEI, and they were able to grow the export market as well. So that opens up new avenues for revenues for the company. And also, I think on the retail side, they make great strides. They have, of course, completely wound down their EPC division, which is great because that was a high risk business. And the brand remains extremely strong. Everything is good about the company except the P multiple, which is at 50 times or so. So I would say that it's a hold for us. We remain invested, but from a fresh investment perspective, I'm not so sure. There are many macro fundamental reasons why the industry and the company should do well over the next 3 to 5 years or so. But it's just the valuations are on the expensive side for a business where there are many choices, and it's not like a concept business or something.
What is it that you like at these levels?
So I think we are going more and more for some of the platform companies. So recently we looked at Zaggle Prepaid. That's looking quite interesting. Unfortunately, we were very positive on BLS International also, but then that negative news flow came over there. And then we like these online travel agencies like Yatra Online looks quite interesting. Very good set of numbers. Within the software, I'm getting incrementally positive, at least on Tata Elixir. It's been an old investment of ours. Although results are not that great, but management commentary is positive and new development center should start yielding good results, returns also.
Right.
So like that, I think there are a few companies which are in kind of different type of businesses that we're looking at.
Take that point. Thank you, Dipan, for joining in. We'll take a short break on that note.